Webull, ticker symbol BULL. I mean, they just completely obliterated Q2 2026 consensus. For those of you tracking this, it was a massive beat. EPS came in at 12 cents, which is like a 300% beat over the 3-cent estimate. And revenue hit an all-time record of $198.8 million, up 51% year over year.
Yeah, and while they didn't issue formal quantitative guidance, which is pretty standard for retail brokers management, was heavily highlighting surging July and August volumes on the call.
Right, and the street absolutely loved it. I mean, the stock surged over 14% in after hours, trading right after the print. So our mission today for this deep dive is to figure out exactly why these numbers exploded and whether this is the start of a new era or just a one-time fluke.
Well, to understand that volume explosion, you really have to look at a major structural change that happened right before the quarter ended. On June 4th, FINRE eliminated the pattern day trader rule, or, the PDT.
Yeah, and for anyone who hasn't traded in a smaller account, the old PDT rule is basically like a nightclub bouncer. If your account had less than $25,000, that bouncer only lets you onto the dance floor, meaning execute a day trade like 3 times a week.
Exactly. And that restriction was completely removed. That single regulatory shift caused Webull's trading revenue to jump 66% year over year to $147.7 million.
Which essentially fired the bouncer and just threw the doors wide open. I mean, retail traders suddenly had infinite ammo, which perfectly explains that insane 62% spike we saw in daily active trades.
Right, and the 68% jump in options contracts, too. I mean, it allowed their existing user base to just drastically increase their activity.
But here is my pushback on those numbers. Throwing the doors open is great for a weekend party, but is this just a one-time sugar rush for retail traders? Because it's easy to juice metrics when a restriction is lifted, but actually sustaining it is a different game entirely.
It's definitely the right question to ask, but their operating leverage, strongly counters that sugar rush theory. Webull didn't just grow top-line revenue. They actually held their expense growth to a mere 13%.
Wow, which is incredibly disciplined when your revenue jumps 51%.
It really is. And that discipline drove an adjusted operating margin of 31.5% and a record $62.6 million in adjusted operating profit. But more importantly for you, when looking at long-term viability, customer assets grew 79% to $28.5 billion.
Wait, and didn't the average account size jump too?
It doubled, yeah, to over $5,500. So
Yeah.
users aren't just logging in to frantically day trade without limits. They are actively parking significantly more capital on platform.
Okay, so they have more money on the platform, which they absolutely need, because right now the stock is trading at a 108x forward PE. That valuation is, pricing in a whole lot of perfection.
Right. And to justify that kind of premium, management's commentary made it clear they know they can't just be a basic execution venue forever. To sustain a multiple like that, you have to transition these highly active users into stickier ecosystems so they don't jump ship.
Which is why they're rolling out new AI tools, right? Like Vega Analyst. That one is fascinating because it's not just a simple chatbot. It synthesizes market data to give users personalized trade ideas and risk assessments in real time.
Precisely. It's designed to keep traders constantly engaged and logged into the app, rather than going somewhere else for their research. They're trying to own the entire user workflow from research to execution.
Right, and they're pairing that software stickiness with aggressive international expansion into markets like Spain and Thailand to keep the top-of-funnel growth going.
Sure, but they still have to navigate the primary bear case we flagged. Webull remains highly vulnerable to market complacency.
Yeah, like if retail volatility drops or if the crypto market cools off, they have a serious problem.
They do. They must successfully convert these active day traders into users of higher margin products. Think margin loans and managed bond portfolios.
Because if they fail to do that and trading volume dries up, they risk severe multiple contraction, right?
Exactly. The 108 XPE just won't hold if the growth story breaks. Though, it is worth noting, Wall Street remains firmly bullish for now, with analysts at Rosenblatt and Northland recently raising their price targets to $15.
Right. And if we connect this need to diversify away from retail day traders to, the bigger picture, there's a really fascinating thread for you to pull regarding their B2B side.
Oh, yeah. Webull CEO actually expects their rapidly growing B2B institutional platform to eventually match or even exceed their retail business. They are essentially renting out their back-end trading infrastructure to other financial institutions.
Which raises a really provocative question for you to mull over. Could this retail brokerage darling actually evolve into a behind-the-scenes enterprise tech giant? That would completely change how we value the company.
Keep an eye on that institutional growth and make sure you follow the show for your daily earnings coverage. We'll catch you next time.